Hello, everyone, and this is Reggie with Stock Talk. And today is Sunday, and this is the week of Christmas, the final trading week before Christmas. We also have Tesla being added to the SP 500 tomorrow. And this video is a play on CarMax, right? So I feel so bad, man. I didn't do a video on Nike, and I played it, and you know, did pretty well. So, well, we'll know tomorrow. We should though. It gapped up unless they have a complete tank tomorrow. Knock on wood, it doesn't happen. So anyway, yeah, with Nike, I got in on Nike. I saw it drop, and same thing I'm seeing with CarMax. Traditionally, on Nike before earnings, it drops. Not always, but a lot of times it drops. It's a sell off, and then after they release earnings, it jumps up. And the previous earnings, I remember Nike did really well, and I knew Nike was already doing well through the pandemic. So it was kind of a no-brainer, but I knew it was sell off and then it jumped. So look forward to seeing it move this week. Hopefully it keeps up the momentum. So anyway, with CarMax, I see the same thing. So I'm gonna show you this pattern I've noticed in CarMax's earnings. They're releasing earnings. I believe it's Tuesday. I looked at so many stocks today. I look at hundreds of stocks a day, and I just want to verify. Yep, 22nd. So on the 22nd, which is Tuesday, CarMax will be releasing earnings. So right now, let me show you this pattern is doing. I'm gonna show you the pattern, and I'm gonna show you how I'm gonna trade it. So we go back. Let's go back, go back, go back. All right, so right here, let's zoom right down. Okay, so this was the last earnings, right? Look at this huge sell-off. This is the volume. This is volume. Huge sell-off. This is the candlestick, and this is the ultimate. This is called a bull trap. Probably a young bull trap because there's a lot of selling. So let's start here, right? So let's say sometimes you look at this as a good entry point. If you didn't know earnings was coming, you'd got trapped here. So that's why it's good to know your information. So it hit the bottom of the Bollinger Band. It looks like it hit bottom at $100. If you didn't see anything else, right, you would think, oh, this is a good entry point. It's at the bottom of the band. It jumped up the next day. You looking like a hero. It got as high as $105. So you went from, if you got it right, the bounce at 101 to 105. So that's a lot of money if you trade options. And then the next day, oh man, you're about to pay off your house, man, because you're looking like, oh, you're a hero. And now you're from the bottom of the Bollinger Band to the very top. And if nothing screams sell more than that move, you might be deaf. So it jumped all the way up to 109. But if you don't know earnings was coming, you know this is why it did that. So people bought. The sellers, a lot of people sold though, but it's still not people to move it up. And then it tanked from 109 and got as low. It got so bad it broke the bottom of the Bollinger Band. These things usually stay within the range, within the Bollinger Band, and it got all the way down to $91. Talk about curling up in the bed and crying your eyes out. If you're a rookie and you got caught in this bull trap, and it jumped too, man. It jumped down. So that was that earnings. Not good. Look, it looked like he even gave you the middle finger. Look at this. This guy. This was rough. So you got the volume here. People already started selling. Then bam, big sell off, and there's more selling. And so let's look at the next one. And so this is the second to last earnings play. So same thing, man. Look down here. It hit the middle of the Bollinger Band. Buying, people bought it. It gapped up, right? People see earnings coming. And I think, especially with the pandemic, used cars are killing it. And CarMax is a play on used cars. They used to be a Chrysler dealership, but now they're just used. And so, boom, it kind of stayed in a channel, right? So people got a little false confidence and it didn't fall, so they bought. And then, boom, the day of earnings went from, you had a high of $98 and fell as low as $89, $10 drop. And then from there, if you try to hold out, you get a little tease the next day, and then it just completely fell out again days later. So that's CarMax, man. I mean, The next one is during COVID and lockdown, so we're not going to count that as a pattern. And so those are the last two recent earnings with CarMax. And I'm thinking maybe the same thing, but we want to play it both ways. Because anytime you think you're right, you're wrong. Because the market is designed to beat you, right? The house always wins. So when you think you figured it out, buy insurance. And insurance is a straddle, buying a call and a put, right? So how do you do that? That's how I'm gonna play this. Because I am almost confident it's gonna tank, but because I think that it's gonna go the opposite way. So again, technical analysis. Let's get back to the math of it all instead of speculation. So we have uh, some support. Let's mark a support here. This is almost like a big old cup is filled out here. You can see it bounce down, right? So this is a daily chart, and so where's it going to go? So if we have an update, so we already got some selling. Look at that. That was Friday. We already got selling. So we're gonna probably have more selling tomorrow, and then on D Day, it's going to be we'll see what happens, right? So tomorrow it may come down to $96, or it could break free. We'll see what it does during pre-market, but it could break this $100 mark, right? It's gonna be hard, but it needs volume to break the $100. So we need enough people that are hopeful, like because look, we got buyers. Look, the last few days we had buyers. Those green candles are buyers. Buyers won. And then we had a lot of green selling off. So I don't know if the same people sold or what. The only difference between this rally and the last one, it was a build up to the sell off. See, there was a lot of build up, so there's not a lot of buyers. So it could actually go up because we don't have a lot of buyers, there's a lot of sellers. So we got to play it both ways. You're undecisive, and we have a small channel here in the Bollinger Band. See how it shrunk? See them green lines? So if it jumps up on Tuesday, our simple resistance will be $100. Our next hardest one that we'll get, it's a big old gap, and it'll hit 108, and then maybe keep going to about, I can't see what that's in a way, 113, 114, about 114. Yeah, let me get this out the way. No, that's not it. There we go. Now we can see. So 113. So look about 113, right, as a high. If it tanks and wets the bed, it's flying pretty high right now, but we got to see what Monday will look like. Let me get me out the way there, and we'll if we have a huge sell off, which you need prior volume for that, but if we have a huge sell off, we're looking at hitting $92, but our bottom resistance is way down here at 85. So we want to set our straddle between, I would say, 92 and 108. So let's go to the options chain. For the max, we want to do the 24. This is a short play. I am not holding this. I have no interest in holding this. So this is going to be a short play. So let's look at the full chain here in E-Trade Financial. And this is an options chain, so your broker maybe look different. And so now, this is interesting. So I said 108, right? And look, they don't see. This is how the house messes with you. This is how the market messes with you. The spread is horrible at 108. So they know that's a key resistance. Look at this. This whole the 106 to 108 area is just horrible. So basically, this is the ask, right? You buy ask, you sell bid. So if you buy, it's $200 for this contract, and it's instantly worth to sell $55. Look, that's the spread. That's the horrible spread, right? So they're making you take risk. So usually it's that spread because the odd. So that's a good. So this kind of tells you the market may go up. because look at this. This little range right here is horrible. So the market may go up. And then you have cheaper, it gets cheaper. But look at your volume. Volume is the buying and activity of buying and sellers, right? So our volume and then our, what's that called? Open interest. Open interest is easy for you. So nobody's bought it yet. So I bet the open interest jumps tomorrow. So it's got very low open interest, but a lot of buying and selling of this contract. People are undecisive. So anyway, it's only a 10-cent spread here. And again, remember our trend line is showing, this blue trend line is showing about 113. I'm thinking it's going to hit 108, but this blue trend line is saying 113. So, and this is kind of confirmation on your technical analysis when you see other people verify it because they look, they're buying the 110 because you can't buy at 113. Look, it goes from 110 to 115. So if you want to be in the money, you buy the 110 and it's cheaper, right? So that's kind of it's kind of a trap. I don't know. Cheap, I don't know. So I'm thinking it's going to get to the 108 because they, look, because they're trying to discourage you from buying the 108s. So if you buy the 110, I mean, you won't be in the money, but we're not trying to be in the money. We're just trying to, we're trying to buy and sell, man. So we got that for our calls. And we said 85.92, I think 92 for our downside risk. So if it goes to the downside, 92, we're looking at a big gap spread. Like, let's see. 95 got a decent spread, but it's expensive. You're spending $185 per contract. But if it hits our 92, it's $100. And to be honest with you, if it goes down, I'll be happy breaking even. So let's try our 92. Look at the volume. Let's look at the look. Boom. Everybody's at the 93.50. So, and again, remember, this is Sunday. So tomorrow it was all this will recalculate. So you may have to figure out, but as long as you look at your resistance, but just keep an eye on your spread. So all this is probably going to change when market opens tomorrow. But these are all Friday's volatility and numbers. So this may all change. So yeah, so everybody's buying the 93.50. So let's look at the straddle. Let's do a straddle. And a straddle is when you buy a call and you buy a put. So if we do the 110, so I already pre-did this. So if you did the 110, you did 3 contracts on the call options. And if we did the 90, let's see what 90 is. I kind of just plugged those numbers in there. They kind of worked out. So if you did the 90, ooh, it's almost half. That's not good. See, this is how to get you, man. See, I'm thinking 90. This is how the market plays you. See, 90. 90 was right here. Oh, yeah, it's the bottom of the, see, it's the bottom of this channel. See, this channel is trading in? It's trading in this channel. And that's what 90 represents. Huh. So I'll be happy with 92. Let's say 93. Let's see what 93 looks like. I think I'll hit at least 93. Yeah. Huge spreads, man. Huge spreads. So we might have spent a little money on our put. Let's do 93. Let's do 93. Look at that. I didn't even look at that, man. I didn't pay attention to that. I was like, let's do 93.50. Look, that's what everybody else was thinking. So everybody else thinking the same thing. 93.50. So let's do 93.50 on our put side. And these numbers on options profit calculator, I use this for every option trade that I do. So we're looking at $600 debit spread. And I like to appeal to smaller accounts. So let's just say one. Let's say one contract. You do many contracts as you want. So if we did one contract, one contract would cost us $200. That put is really costing us money because the call is cheap. So we are looking at spending $200, risking $200, and we will break even If it goes up to if you hold this now, I'm not saying we're going to hold it, but if you hold this and it breaks above 112, 112 is your break even, right? On the upside, if it drops $90 below 90, that's your break even. Well, no, your break even is 91.50. And so the green is your profitability, the red is losing money. And this is net. So this is money in your pocket. This is after you pay the $200. This is your total profit. This is net profit. So I'm trading it same day, right? So it says the 20th. That's the only thing I liked about this options profit calculator. It calculates weekends and off days, which I don't like. So it's not 100% accurate, but it's in the ballpark, right? So this 20th will probably be tomorrow, right? So if you did this tomorrow, this would be the 21st. And so if you did this the same day, or let's say you want to avoid the PDT rule, right? Because if you buy and sell on the same day, you can get a ding for PDT. So if you hold it to the next day, this is what you're looking at. So, well, no, we're in Tuesday anyway. So this represents Monday. This is Tuesday. So on Tuesday, CarMax jumps to let's say it gets to the 113. Everybody's thinking. Let's say 14. Let's run up to let's say 1250. You've made $314 on your $200, right? That's a total of 514, right? But your net would be 314. If it tanks down to 92, you've made $40. You didn't lose money, right? Or if it goes to 93, you made $100. If it goes to 91.50, you made $200. So if it completely just if it goes all the way down to resistance, you made about $600. This is a pretty good day. So this is a straddle. I highly recommend using the options profit calculator. Um, and I wouldn't be careful what you put a straddle on because if you do something with high theta, I don't do long term straddles, man, unless you have a low theta. But this is maybe a 2 day play at the most, right? Because the options on Tuesday. So 1 to 2 day play after buying it, and this is what it looks like. This is your profitability. Now, if it goes, you lose if it goes flat, like if it trades in a channel, which it doesn't look like. Also, too, if you look at the chart, it's in a bit of a breakout already because it traded out of the channel. Let me show you. This is the channel. This red line. Let's change the color so it's easy to see. Let's make it yellow. That line is the top of the channel, and this is the middle of the channel. It looks like right around here. Actually, this. So that's where most of the activity is within. And you see, we already have a breakout, right? Right here, it broke out, and it held. So that's a good sign to the upside. But earnings just changes the game, man. You just never know. Because if you look back here, it broke out, fell, broke out, fell. Usually, a breakout is when you get three solid candlesticks outside that line. So right above. So now this resistance is now support. So if it falls down, it may bounce off of here. But with earnings, you have such violent moves up or down. Sometimes support and resistance doesn't matter. So this is how you trade CarMax. If you have any questions, feel free to message me in the down below. Also, don't forget to hit the like and subscribe button because I look at hundreds of charts a day, and when I find little gems, I do share them. So you can get notifications when I share those little gems. Don't forget to like and subscribe. This is Reggie with Stock Talk. I'll catch you on the next video, and good luck with CarMax.